So I want to jump right into it. And going through a good week of a lot of new listeners, a lot of new members in the chat room, answering a lot of questions, and realizing where I need to catch up on, catch some traders up, get them on board, get them on the on-ramp of how we trade here at Day Trading Radio, because it must be overwhelming in some cases to hear some of the terminology, just thrown at you, not having any background or anything. So I understand that. So we always continue to regurgitate it and go over it again and again and again, because the setups are the ones that we take, and it's very easy to. Oh, you know what I'm not going to do? Hold on. I just made this a private video now. Now it's not going out to the public because I almost forgot something. Anyway, getting back to the issue here is trying to catch people up and get them moving and trading in the right direction. Understand some of the concepts and how to get in and out of the markets. Now, like I said, I'd like to make a roadmap for you, a business plan. I call it a business plan. I say that business plan is good for me because kind of defines our entries, defines our exits, has all the rules. It's like if you want an answer, you open up the business plan and you take a look at what chapter it is, and it'll tell you exactly what to do. And that's how I developed the HPS methodology. The highest probability setups are mapped out for you. And you could probably, count them on your hand. If we look at different setups that we like to trade, the divergence, long and short, and different versions of the divergences. Different versions of the divergence. I didn't see that one coming. So you have a few right there, and then you have the continuation. You have the flags, and the flags are very important. The bull and bear flags, but they have to be, you have to use them in the right scenario. And it still could be tricky. But as we go over, we kind of mark off when these things really work, and I know when they really work. It's when two things are happening. It's when you have a pullback right to the 20 and this hits the 20 at the same time. It's like a double whammy for algorithms to just pick up on that. And it usually bounces right off of that. And it's very important also with that 60-10 to be kind of higher the better. It's a game of inches or hand grenades and horseshoes. Being close to the number, relatively speaking, if we look back at that 60-10 and how strong it's been, the trend is very strong. So every pullback in the trend probably should be bought. And that's why that becomes such an important, and that's what you have to wait for, wait for that set. And, what I tried to stress this week is the importance of when you do see a flag. So many people are conditioned to trade a flag out of the flag, get a breakout and then the flag. And so much, that's okay. Lots of times a flag is continuation is going to go, but also lots of times a flag will pop and then pull back, quickly. And it could continue higher, but you don't need that. What's really important is to understand how a flag is made, and then buy into the lower part of the flag. And then you gain all this. You don't have to make any decisions at this point. You'll probably be selling because you're all getting overbought. Now, yeah, it went higher and stuff, and that's just how it is. But that's why we have trailing stops. That's how we have that, multiple contracts, to kind of deal with that. And not every trade's going to be perfect. We have to develop our discipline and the patience to wait for a setup like that. All right, and there's like this one here. We came down to it. We hit it. It was pretty good, and it got an initial bounce, but then it rolled back over. You will get the initial bounce. That's why it's so important to buy right when it hits the 20, and this is hitting the 20 at the same time. All right, and you're going to get a bounce. You're going to get a bounce. Maybe it's a point. Maybe it's 2 points. But you better know that, the trend might be getting tired here. Flags tend to break down after they break out. That's when you start to see the rollovers happen. So, but you always get a good, very rarely does it just drop off. Lots of times you'll get that continuation, but fail to kind of follow through and then roll right over so many times. So if you're buying on that 20, don't just close your eyes and buy. If that 20 and 20 is lined up, and the trend and the 60-10 stochastics down here are lined up, put the order in. Now, what I would recommend is put in a bracket order in. set up a bracket order on your Ninja Trader where you push the buy button, and it'll automatically put your profit, your sell limit if you're long, and your stop if you're also, and it'll give you that bracket. So sometimes that might even be better in a situation when you have a 2020 flag, because it's going to give you a nice little pop off of that 2020 flag, and you want to be ready for it. So you're buying into that. First of all, you're buying into weakness. You have a better chance of catching the bottom there than breaking out of the flag. Very important lesson. Consider the lesson a 10-minute lesson right there on bull flags. The bear flags are going to be the same thing, but the opposite. And I'll let you figure that out. The other thing here, if we continue to again look at our other setup we like to see, channels are very important. The 1, 2, 3 channel. Once you start to establish these 1, 2, 3 channels, when we do have divergences inside of them, 9 times out of 10, the channel will be broken. So actually, you can see a little divergence here. It's not a big one. I mean, it's barely under the 80 line. It's probably 3 degrees. It's from here to here. I didn't even mark it off. It happened about almost 10 o'clock, and it pulled back a little. It pulled back until we got oversold. This was showing good strength, so we call this what we call a 2050. Same kind of flag. It's the same type, works the same way as the 2020. The tricky part is to know when it's going to be 2020 and when it's going to be 2050. And usually you could see, on the first pullback, if we're breaking through the 20 and we're not down at 20 yet, let it play out. I always say it's more important to have that stock or have the futures, having a positive candle in the worst case scenario. So that's, again, flags. Flags are very, this week, a lot of flags. Now we have some news and some earnings. I didn't see anything monumental, great. Look at this. I look back at, of course, the 10:50 to 11 o'clock double top. Big divergence there. That's a nice double top. Look at the angle here. Remember this also. Lesson number, and it's not even that much of an angle. I thought it would be a little bit more. It's about 5 degrees. I want to get it over 6 degrees, It seems like it would be a little bit more. Maybe it's right around 6. It's underneath the 80 line. That's it. That's important. This is high. This is relatively the same high. You can see I really marked it off. Probably was a Zello alert too. And that's, and we got that down. Now, again, it starts to roll over. We eventually get down to around here when we start to get underneath that 80 line. So right around the 50. And again, that could be an opportunity to take something off, even though it did go down a little further. At one point you're going to have to take profits. But you can see that 60-10 is started to trend down. And once you break that 50 level, things start to get weaker. You can tell the trend is kind of changing. You have the bigger trend lines now being played out. So now you can start to concentrate on bear flags. Over here you had the bull flags, upward channels, pullback, easy to read. Now you have the bear flags. The move is going down. The 9-3 stochastic is rotated back up to above 80. This is down here. This is underneath 20, or at least right around that 20 line, and heading down and flatlining. So you have that nice divergence. You have that nice divergence, and you have that. That divergence is actually the flag. It's also a flag. And here the same thing. You got the rotation up. This is really embedded. It started to roll over. A little flag. Here you got over 80 again. This was still kind of embedded. And you're kind of right on the trend line. And you can see a nice little move down again. Flags. Textbook flag. Pulling away from the 20-period moving average. Drifts back into it. The timing is almost perfect. Comes right down to the 20. This is holding the 90. This hits the 20 off. It springs like a springboard. Here is the same thing, but a 50. So it really depends. At that point, when it was at the 20, this was still here midpoint, so that's why it wasn't the 2020. By the time this got down, the price was on the 50. That's really what you have to do, is get that timing right. Divergence right here, called 3 o'clock. Don't forget that weird candle is just a decoy. It's a decoy camera. It's really about the closing prices and the average. And you can see that low right there. And this has kind of made that nice high here. We spotted that. Here we're looking for a bull flag here to pull back to the 20. We didn't get down to the 20 exactly, but this was showing great strain. So that's kind of my bull flag thing. Remember we talk about quad rotations? Well, those are vertical marks like that is when, if you see on the chart, that means it's a quad rotational thing, and we could look back up here and thing. This type of movement here is the flag, and then the divergence is, the divergence is the divergence. I usually have it on the top and on the bottom. So that's what you have to do. That's a good kind of refresher course on the flags right there. Let's finish up by just looking at today. This was Thursday. And from early this morning, we felt some strength in the market, and it just could smell it all day long, just how strong the market was. We had a divergence here, which pulled back nicely to, the 50-period moving average, and then kind of continued moving higher up. Then we started seeing that beautiful flag formation, nice pullback, holding that. We came right down to the 20. Even though we didn't get exactly to the 20, this is kind of something that you have to kind of deal with. If you have a nice, kind of a flag pull and you're pulling back pretty organized, you're very close, sometimes you just want to, pull the trigger there. Most likely, you can see that it's probably going to be that scenario, and that's going to be the keys, that 60-10. If that's up there, you might as well take that shot, because that's a good sign that the trend is going to continue, especially earlier in the day. And usually we get a breakout before we get the failure. Like this is how these flags typically fail. They break out and then they roll over. All right, so that you're kind of safe even if you get in on a flag. If you get in the proper way, right on, when you have the 2050 or the 2020, and you get in there, you're buying that weakness. You're going to have the bigger pop. By the time you get out of the flag, you don't have to worry about how far you're going to go. You already got a nice move now. There was a fast little move down here. Again, you can see we came right down to the 50. And this is the one thing I want to point out. You might see a nice sell divergence. But if that 60-10 is embedded, 9 times out of 10, that divergence is going to get defeated to the upside. And it probably comes down to a little flag, but it probably holds the 20-50 period moving average. So if this is holding strong and you have a divergence, you want to take that divergence off. On that first rotation. That first rotation, you always want to take that off. And if it doesn't get down there, you got to be very careful. If it starts holding that 50-period moving average, and this is holding strength up here, most likely you got, another push. I was starting to lose my breath there for a second. Here was a beautiful little sneaky divergence here, a real steep one here. And that's what we see this a lot. We kind of come down, you get a little pop, that candle just popped right up, then closed, and then started moving right back down. And that close that was a very suspicious candle, because you had a nice close, you have a nice pivot here, and it kind of went up here and cleared out some stops and then closed right on that line. So that line was really important at that point. So you can actually take that short there with the stop above that line. That was a good short. That was a nice divergence, and it went down. I think we said we would be careful around here. We were looking for a bounce back up. It moved down a little bit further, and then started chopping around before moving back up. So the timing, nice move up, nice flag. You said stochastics are embedded here. So we had our setups. This was kind of sloppy today at 3 o'clock. I didn't want to trade at 3 o'clock area. I had this kind of a little running divergence here and that little pop, and then came back, chopped around. Quad rotation right here at the end of the day, and a little pop into the quad. And this is where we are overnight right now. So that's that. That's a little review on the futures. We're going to be, oh, you know what? There is a new coupon. Let me tell you about the coupon. So BULENOX has a sale to the 13th, which is today is the 9th. Let me get the coupon for you. All right, so the BULENOX, they have a coupon out. It's the DTR 50K. That's how it is. It's DTR at 50K. It's $18.05 a month. So whatever that comes out, and percentage-wise, up there, it's got to be like 85%. And it's lifetime renewing, so it's a real good one. And it's also good for option 2. That's the end of day stop, which is different, and that doesn't use that. You very rarely get a coupon for that one. So that's good for option 1 and option 2. And then, of course, the Apex is still the Apex. That's 80% off. That's DTR Apex. That's the Apex one. I'll move that over there. DTR Apex. And that's a one-day qualification. So it means you could qualify in 1 day. All right. So that's the new one. It's good until the 13th. They have one for the 100K also. The coupon code for the 100K is DTR 100K. All right, and I think it takes about $170 off. It brings it down to 30 something, I think. But double check that. Maybe it was more than that. I'm not sure. I just think this was a good deal. This DTR 50K is a real good one. $18 a month. That's really good for lifetime recurring. So got that out to you. Other thing is, what was the other thing I was going to discuss? The Zello alerts. Had an issue with the Zello alerts. The issue's not full-blown yet, but it could be. So I'm in the process of working with the Zello people because I have too many people on it for non-commercial use. So I have to now probably either I'm going to have to, pay for each connection and stuff. But I'll do what I have to do. But it might take a couple days to kind of get it all set up and figure out how I'm going to do that. But it still works for now. But don't worry, that's that. So you see that error code that's on your Zello. That's just for me. It's not for anybody else. All right, so that's the update for now. I want to send this out. Futures are open. I'm going to be trading here just a bit. RPM is doing rpmtrades.com tonight. I'll see everyone in the markets tomorrow morning. Good luck. If you have any questions or anything, you can reach me here at DTRS. That's DTRS at daytradingradio.com.